Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Hey, listen, we got some really important stuff to talk about. So if you're listening to this podcast or watching this on YouTube, this is all about the challenges against the condominium industry. Now, it was Florida. Florida took a big hit, but now it's happening across the country. And there's a lot of people that want to buy condominiums and people that own condominiums and people that are on the board for the condominium association. If you are one of those people, you will want to pay attention to this because we're going to give you some information that is going to make or break what happens to your condominium. Okay. So First of all, Tom McNamara, eXp Realty, thank you. Go ahead and let's just fire off some questions to me. We put some important questions together so everybody can understand exactly what's going on.
So, Bruce, I know that it has always been a challenge to sell a condominium, right? Or to buy a condominium, both sides. When selling them is hard and buying them is hard. And probably until recently, the hardest thing has been the financing. Now we're throwing in all this other state stuff for structural integrity reserve studies and the milestone reports that have to be done.
Which also makes it difficult for financing and things.
So you got those two things now that make it even harder, but it's always been a little bit hard. And the biggest thing is back during the crash, every condominium association lost its ability to get FHA financing, and almost none of them have gotten it back. And so you're only left with really Fannie approval. So you have to get a convention and VA sometimes, right? And now Fannie's going to make it harder. What's up with it?
Let's break it down from the beginning. First of all, why is it more difficult for condominiums? Because a condominium does not stand on its own. It has to qualify with the entire complex, where a townhome can qualify on its own. It is what it is. You own the exterior property. You can control it.
Let's review that from the beginning, because that is a big difference that a lot of people don't understand, is that condominium is both a construction type and a ownership type. Townhouse is a construction type and an ownership type, and sometimes they're swapped half and half. But for the most part, a condo, you own a piece of the building along with the common area with
you own the interior walls. That's all you.
Right. With a townhouse, you typically own everything from the dirt to the sky.
Right.
Just like you do with a single family. The only difference is you have a shared wall with all your neighbors.
Yeah.
Okay.
And you cannot look at a building and tell whether it's a condominium or not. Now, obviously, if it's a giant building that's 10 stories, it's not a townhome.
It's going to be a condo.
But even my office building is considered a condo, and it's freestanding. It's not attached to anything. It's a condo association.
Right.
Now, when it comes to single family residences, townhomes are viewed the same as a single family. Condos, you have to have the entire complex approved in most cases. So we have Fannie Mae and Freddie Mac, which are conventional loans. Then you have FHA and VA, government loans, and USDA. USDA doesn't do a lot of condominiums because they're designed for farm properties. Okay. Right. So FHA is the hardest because they add extra layers. They limit the amount of owner occupancy ratios, can't have too many investors. Fannie Mae and Freddie Mac don't care if you're buying a primary. They only care if you're buying secondary or investment. And there's limitations on that. FHA has strong limitations. And if you have to be approved by the board to live there, in other words, you have to go through an interview process to be able to weed out bad apples, which I think is a great idea. But our government, FHA, says no deal. That's discriminating. But
right. That goes back to the Fair Housing Act. And so when we use the word discriminating, we should mean it as in we're picking the best. But discrimination by race and familial status and age, right? There's 7 different places that you can't discriminate and shouldn't.
And FHA does not discriminate on any of them, even in the condo.
They don't make a distinction about that. They just blanket say you can't do it.
Yeah, if you ask the questions, you can't do it. even though if their only questions are, have you committed a felony? Are you allowed to be around children within 1,000 feet? And if you say no, you're out of here.
That's
'Cause
right.
I don't want to live in a complex where there's a convicted felon or pedophile in my community. I'm sorry I said it, but there it is. And I think everybody probably feels the same way, but that eliminates FHA. Now, forget FHA. Most condominiums are already off of that now, but Fannie Mae is now making it harder too. So to get a conventional loan, Fannie, Freddie, when you're buying a condominium, the lender has to have the association or the management company complete a condo questionnaire. It asks about insurance coverage. It asks about lawsuits. It asks about a lot of different things. It's about 100 questions.
I was going to say, it's a lot of questions. And
Questions.
have you found it difficult to collect that information?
I've been doing condominiums for 35 years. So is it difficult? Yes, it is. And if there's a delay in the loan closing, 90% of the time it's because of the association. You have to remember, the association doesn't care if you sell your home or not. They don't really care. They're just making sure that the street's cleaned up and the lawn guys did their job and the pool's clean. That's all they care about. And they collect the fees and distribute them. But they don't care whether you sell. They don't care if your value goes up or down. So when a condominium unit is approved conventional, that means I can buy a loan, I can buy a condo and get a mortgage as a first-time home buyer for only 3% down. I can buy one if I'm not a first-time home buyer, primary residence, 5% down. I can buy a second home, 10% down. I can buy investment, 20% down. Okay. Now, if the rules change, and right now there is an option for a client to do what's called a limited review. And really what that means is I'm going to look the other way because I know you're not going to answer the questions the way it should be. So I'm only going to give you 10 questions.
So instead of 100 questions, I've only got 10.
Now, it's easier to pass that way. Of course, so that's been the case. So it increases the down payment generally to around 10% for a primary, 20% for secondary, and 30% for investor.
Okay.
And then you're good to go. You're good to go. But Fannie Mae is coming back and saying, we don't like it. We're going to eliminate the limited review. Now, when you eliminate the limited review, it already hurts selling more condos. So now it makes it harder to get in the complex. So when it's harder to get financing, what do you think happens to the values?
No, values go down. We've seen that, right? When everything was going crazy and money was cheap, values went up, right? So when it's harder to get financing, clearly values are going to go down.
And if you own one or you want to buy one, it makes it more difficult. And would you want to buy a condominium knowing that potentially it's going to continue to go down in value instead of up? Most people don't want that when they're buying real estate.
No.
So it really hinders it. And the harder it gets, the lower your value gets. So
I know that we went through that when my daughter got a condo, or when we refinanced her condo. The complex that she was in had been on the Fannie approved list.
Yes.
And then they didn't report some stuff. I think it was about their insurance. And they got taken off the list right before we went to do that refi.
Yep.
And
I got them back on the list and we closed the loan.
list.
Now that was fine for them, but it might be more difficult now. So one of the changes, Tom, that Fannie Mae wants is they want the reserves, meaning amount of money that the condominium has in reserves for the HOA. And there's a formula that's used to determine how much cash reserves they need based on how many units they have. And that formula has been 10%. So they need 10% in reserves of the total amount of HOA dues. Now, they're raising that to 15. Now, I will tell you this much. I saw a lot of condominiums that were approved fall off the list because they couldn't even keep up with the 10, let alone the 15.
I wonder if the new SIRS requirement is actually going to help them in that case, because they're going to have to build better reserves anyway, right? Because of the reserve study that tells them that they need to be allocating for the roof as it ages. They need to be allocating for the HVAC as it ages, for the pool as it ages, for the parking garage as it, all that stuff has to have a reserve that's going to grow. So that should help them, at least here in Florida.
You bring up a very good point, Tom, because at the end of the day, who do you think works on these associations? Okay. Karen, she's retired. She doesn't have anything to do during the day, so she joins the association. She doesn't plan on moving. She's not going anywhere. So how does she care about future buyers? It's not that important to her. Now, the state's requiring them to be certified and have recourse. Now, who do you think is going to volunteer to be on these board of directors anymore? You're going to have to hire independent companies. And if the independent companies are coming in, that's a cost. We're raising the reserves. That's a cost. Where's the money going to come from? Raising condo fees.
Yep.
And the more you raise them, the less attractive they are to somebody wanting to get in that complex.
I know we had that challenge again, going back to my daughter's example, we had that challenge with Betty. Her name was Betty. And Betty didn't care. Betty's like, everybody pays cash. What's the big deal? And I'm like, yeah, that was great back when they were 30 or 40 grand. Now they're 200. People aren't any cash. That's why you're not selling enough of them in here. That's why the ones that are for sale are sitting.
You know? Exactly right. So if you are seeking to purchase a condominium, if you own a condominium, whether you want to sell it or not, sooner or later, it's going to be bought and sold. Mm-hmm. If you are on the board for a condominium complex, I highly recommend that you seek me out so we can help you understand what it takes to get your condominium back on the approval list. If you do, your owners will love you and you will increase value. And if you can get on the FHA and the Fannie Mae list without doing any improvements to your property, it will go up in value.
Absolutely. Yeah, for sure.
So those are some of the things that I think are very important. August 3rd, big date. That's when the elimination of the limited review comes into play. There's going to be additional rules coming in place next year that they want to impose. So it's going to get real hairy for condominiums. So if you are on the board of directors and you own one, you should seek to find out what it takes to get back on that list and do everything in your power to do it. Otherwise, your valuable asset is going to start declining if it hasn't, and it has already.
It has. I know the condominiums, and we have anywhere between 9 and 12 months of inventory in the condo space.
Yep.
They're definitely not easy to sell right now. Hey, I do have a little bit of good news from the federal government. They did pass, and it's not signed yet, but it's passed, the Housing for the 21st Century Act. And one of the things that is doing, specifically for condos, it does a lot, but specifically for condos, it is allowing the condo association to get some financing from FHA to do the repairs. And
they're going to borrow the money to get the reserves higher.
Not just to get the reserves higher, but it's going to be if they need a new roof today and they don't yet have the reserves, they'll be able to borrow to get it, which they've been able to do it, but they had to do it in the private market, which was more expensive. Now they're going to be able to do it in the FHA market, government controlled, a little bit easier. Be able to,
and I think that will help somewhat.
Because you know that the state allowed them now to use a line of credit as part of their reserves.
That's correct.
So I think the whole idea is that pendulum went from way over here to do whatever you want to way over here to do everything that we say. And it's coming back a little bit to, all right.
Well, you got to watch the government, because when they say it, you got to listen to it. And you go, okay, so you're going to allow me to borrow money for my reserves. What's the requirement of the lending of that? Because if you got a note that's due, or your line of credit has to be reapproved every year, lenders look at things that have at least a 3-year continuance. If you got to renew your agreement in 12 months, I'm about 900% sure that's not going to work.
Again, everybody's going to dig into the rules. All right.
So here's the deal. What's the solution for condos? Call me. I have alternative programs for condominiums on what's called non-warrantable condos. Now, are you going to get in for 3 or 5%? No. Your minimum's probably going to be 10% down, but you can do bank statement loans. You can do all kinds of different things on a non-warrantable condo. Are interest rates a little bit higher? Yes, they are. Are closing costs slightly higher? Yes, they are. But can you get into a condominium if you want one? Yes. Can you market it with those type of programs? Yes. And here's another misnomer for all you realtors listening out there. When the condominium says cash or conventional, it's not conventional Fannie Mae, Freddie Mac. It's non-warrantable. There's just no name for it yet. So it's a bit of a trick. Hey, the next time we do these, I want to do something similar to the advantages and disadvantages of manufactured home, the differences of a manufactured home, a prefab property, what is going on in that market? Because there's changes on the 21st century as well when it comes to that. And I think that's a good topic. But if you're
Awesome.
buying a condo, there is options. If you are on the board, get with me. I'll show you what you need to do to fix this problem so you can keep your values going up. That's the word of the day.
You got it,
Thank you,
Bruce.
Philip. Have a good one.
Thank you, Bruce.